They called it the investment of the century, a once-in-a-lifetime opportunity, a miracle of modern finance. But behind the golden promises, behind the glittering dreams of easy wealth, was a lie so massive it nearly destroyed an empire. Because what if the greatest financial innovation of the early 18th century wasn't innovation at all, but the birth of the modern financial scam? This is the story of the South Sea Bubble, a tale of greed, corruption, and illusion, and how it bankrupted Britain before the Industrial Revolution even began. And 5 centuries later, its echoes still rattle through every bull market, every crypto boom, every meme stock frenzy. Because the lesson hasn't changed. The moment greed becomes collective, collapse becomes inevitable. It began in London, 1711. Britain had just emerged from years of brutal war with France and Spain. The empire was drained, its debt staggering, over £9 million, a number that terrified Parliament. Taxes were crushing the people, trade was slowing, and faith in the government's ability to pay its debts was fading fast. But where most saw a crisis, a few saw an opportunity to turn debt into profit. Enter the South Sea Company, a new kind of corporation, one that promised to save the nation, enrich investors, and bring glory to the crown. On paper, it would assume a portion of Britain's national debt in exchange for exclusive trading rights in South America, the South Seas. The idea was seductive. Invest in the company, and you weren't just buying stock. You were buying a piece of Britain's imperial destiny. The potential profits from the New World seemed limitless. Silver, gold, exotic goods, and untapped markets. But there was one fatal flaw. Britain had no access to the South Seas. Spain controlled those territories, and Britain was still effectively barred from trading there. The company's trading empire was a fantasy, a story sold to investors to justify an ever-rising stock price, and that's where the deception began. The South Sea Company was founded by Robert Harley, Chancellor of the Exchequer, a cunning political operator who understood something new was forming in the early 1700s, a world where paper could replace gold, and where confidence could create wealth out of thin air. Harley realized that money, at its core, was a story, and the better you told it, the richer you became. To sell that story, he needed more than words. He needed credibility. So he enlisted John Blunt, a former scrivener, a man of charm, intelligence, and ruthlessness. Blunt was the perfect salesman. He could convince anyone that their fortune was one investment away. Together they transformed the South Sea Company into something Britain had never seen before, a national spectacle. They proposed that the company take over the government's war debt. In exchange, creditors would receive shares. It was sold as a win-win. The government offloaded its debt, investors got rich, and the empire would rise again. The scheme was so dazzling that even the monarchy got involved. King George I himself became the governor of the company. The royal seal gave it divine legitimacy, a sign that this was not just an investment but a patriotic duty, and the public followed. By 1720, London was gripped by mania. Stock trading became the new religion. From the cobbled streets of the city to aristocratic drawing rooms, everyone wanted a piece of the South Sea dream. Barbers, bakers, servants, and noblemen all speculated. People mortgaged their homes, sold their land, and pawned their silver, anything to buy shares that only went one way, up. The share price, which began at $100, skyrocketed to $1,000 in less than a year. Fortunes were made overnight. New get-rich-quick companies popped up daily, some selling shares for an invention to extract silver from lead, others for a company for carrying out an undertaking of great advantage. But nobody to know what it is. It was hysteria, a fever, and at the center of it all stood the South Sea Company, printing shares faster than it could justify them, spreading rumors of upcoming trade deals and royal monopolies. Blunt even offered bribes to politicians and journalists to keep the hype alive. This wasn't just a bubble, the illusion of wealth, created by the belief in more wealth. As the summer of 1720 turned to autumn, small ripples began to appear beneath the surface. Some investors quietly cashed out. Others noticed that no ships had ever sailed to the South Seas. No profits had ever come back. The company's trade empire existed only on paper, and when one powerful investor decided to sell his holdings, the confidence shattered. Panic spread faster than the rumor that caused it. Within weeks, the share price collapsed. Then worthless, banks failed. Generations of wealth evaporated. The same politicians who had championed the South Sea Company now tried to erase their involvement. Some fled the country. Others destroyed records. Among those caught in the wreckage was the scientist Isaac Newton, who famously said, "I can calculate the movement of stars, but not the madness of men." He had invested early, made a profit, then re-entered during the frenzy and lost nearly all of it. A genius defeated not by equations but by emotion. The aftermath was catastrophic. Britain's economy convulsed. Public rage exploded. The government launched inquiries that revealed an epidemic of corruption. Members of Parliament bribed, ministers complicit, and the Bank of England manipulated to sustain the bubble. Many of the guilty were stripped of their estates. John Blunt was ruined. It had already been done, not to individuals, but to trust. Because when the foundation of an economy is belief, and that belief collapses, it's not money that disappears. It's faith in the system itself. That was the true cost of the South Sea bubble. It wasn't just about wealth lost. It was about innocence lost. The realization that modern finance could be weaponized, not to build prosperity, but to harvest it. But history has a short memory, because the same story has replayed again and again, just with new names, new technologies, and new promises. In 1720 it was South Sea trade. In 1929 it was industrial growth. In 2000 it was the internet. In 2021 it was crypto and meme stocks. The belief that the rules of economics can be suspended as long as the chart keeps going up. And yet every time, the pattern returns. Hype, expansion, denial, collapse. The bubble is universal because human nature is universal. Today, global debt has surpassed $300 trillion. People are chasing wealth in digital coins, AI startups, and assets few understand. And central banks, much like Parliament in 1720, are struggling to maintain confidence with promises, not proof. The question is, are we witnessing innovation, or another South Sea bubble disguised in code and algorithms? Because just like in 1720, belief still prints money, and disbelief still destroys it. So what can we learn from the wreckage of the South Sea Company? First, every bubble begins with a story that feels true. The lie doesn't work unless it carries a seed of reality, hope, ambition, progress. But when belief outpaces truth, collapse is guaranteed. Second, corruption doesn't create bubbles. Trust does. People didn't invest because they were foolish. They invested because they trusted the monarchy, parliament, and the experts. And those who abused that trust wrote the real tragedy. It's about wanting to belong to the winning side of history until history flips, and the winners become victims. The South Sea bubble wasn't just a scam. It was the birth of modern capitalism's shadow. The idea that perception is value, and that narratives can move markets more than reality ever could. And in that sense, we never truly left 1720. Because the same story that bankrupted Britain still drives the markets today. The names change, the tools evolve. Maybe the real question isn't how we stop the next bubble. If this story made you rethink what wealth and stability really mean, you already understand what most investors never do. History doesn't repeat, but when it rhymes, it destroys those who stop listening. Thanks for watching. If you found this journey into financial history fascinating, be sure to hit that like button.